Hello everyone, welcome to another Forex video brought to you by yours truly EAS. And today I'm going to be talking about proprietary firms, otherwise known as prop firms in Forex trading. And as usual, we will get right into the video. What are prop firms? Prop firms are firms that provides traders with capital to trade, but it is not just as simple as that. You actually have to purchase an account, and the account sizes you could purchase ranges from about $5,000 to as much as $300,000. I think some even offer as much as $400,000, but you have to purchase these. And what is common with almost all proprietary firms is that they have a two-phase evaluation model where the phase one you have to make a particular amount of money, and phase two make a particular amount of money in percentages. Most prop firms will tell you 8% or 10% first phase, 5% on the second phase, and this is done to be able to, test the ability of the trader. And whilst you're trading, there are specific rules and regulations that are prop firm specific. So when you're getting a prop firm account, be sure to know what the rules and regulations are for that particular prop firm when it comes to daily loss limits, trading during the weekend, and leverage, so you would know if this is what you want. And at the end of the day, if you're able to pass the two-phase evaluation test, rather, you would be given the account to trade for life without any profit target, although you still have to conform to their daily loss limit. But you have the account to manage for life, and that is where the profit split comes in. Depending on the forex, depending on the prop firm, you will get up to 80% profit split. So, if for example you make $1,000 or at the end of the month, they give you 800 and they take 200, and for the first time your initial deposit that you use in purchasing the account will also be refunded. For most prop firms will give you back, but I know there are a couple of prop firms that will not give you your initial registration fee back. And examples of prop firms that have been tried and tested for quite some time now: FTMO, my Forex Fund, E8 funding, and they all have their pros and their cons. So let's just go to the website of these proprietary firms so you see for yourself. The first is FTMO. As you can see, okay, Forex traders wanted trade companies capital receive up to 90% of profit. We cover the losses. So basically, you get 90% of the profit, up to 90% of the profit, but I think it's 80% initially. So there's the FTMO challenge, then verification. So this is the first steps, verification is the second step. So you can choose the currency, the risk, normal or aggressive, and what your starting balance. As you can see, the rules for these accounts, the step one is 30 days trading period. You have to trade for a minimum of 10 days. Your maximum daily loss 500. Your maximum daily loss 500. Your maximum loss overall within that 30 days is 1,000. Profit target is 1,000, and the registration fees 155 euros is refundable if you pass. So if you pass this objective, you move on to this. Now you have to make 500 instead of 1,000, and when you get it, you become a trader. Indefinite trading period. You have to still obey this losses, but there's no profit target. So you see minimum trading days 10 days, profit target 10%, then 5%. But for MFF, it's 8% and then 5%. And cheaper, they have a $5,000 account, which FTMO does not have. And the fees are somewhat cheaper, I think. Somewhat cheaper. 540 euros to purchase a $100,000 account. 499. So it's about $50. $50, but that's euro, so exchange. After you become funded for MFF, you have to trade for at least 10 days in a 30 calendar day period, and after 30 days then you're eligible for withdrawal. That's where E8 funding comes in. The reason why people love E8 funding is because the minimum calendar day is 1 day for both phases. Same 8% profit target like MFF for the first phase, 5% profit target, but then their initial deposit drawdown is 8%. 8% for MFF. Initial deposit drawdown is 12%, but then minimum 1 calendar day. So you could pass this the next day you're starting the next phase. But for MFF it's 5 days, FTMO 10 days, and then you get funded, no profit target, and you can withdraw 80% of your profit every 2 weeks. But your first withdrawal can be after 8 calendar days. That's why people are flocking over to E8. Until the next video, trade safe and Merry Christmas.